How can you find that next altcoin before it pumps? That's what I'll be sharing with you today. And if you like on-point content with no filler, consider subscribing to the Investa Bros channel for more crypto content. Let's get straight into it. The first thing you need to do is create a list of viable candidates, at least 10 coins that have potential. Ideally, cryptos that you've never heard of before, because this will keep you objective on assessing the potential of that coin. You should look for coins that do not appear on many YouTube channels, because this means that these coins are not on other people's radars, for the moment at least. Look on CoinMarketCap on page 2 and beyond for such coins, but also keep in mind that the further down the list you go, the more risk there is. Now, all you have to do is go one by one down the list and perform an initial analysis. When performing this analysis, here are the things you should look at. The crypto's price history. The ideal candidate would be trending up over the long term without strange price actions or gaps in the volume. If the coin was not around in the last bull market, it's even better, because the lack of previous price resistance will increase the chance of a rally, assuming it's in a long-term uptrend. Look for that coin's crypto exchange support, centralized exchange trading volume, and market depth, all of which is available on CoinMarketCap. The ideal candidate would be listed on KuCoin, Coinbase, Binance, and should have a decent amount of trading volume. Being listed on all exchanges is not mandatory. Sometimes, when a coin launches on a new platform, its price usually goes up days before and after the launch. So keep this in mind, as buying a coin earlier than its launch on the new platform could be a good catch. Another thing to look for is a decent community behind this crypto, which you can check for by looking at their social media, usually Twitter, to see how active and engaged that community is. Some prime examples of this are, on one side, Cardano, but also Dogecoin and Shiba, both of which have huge communities behind them. Spoiler, most cryptos will not meet all of these criteria, but you need to identify at least 10 candidates. So once you have your list of cryptos, the next step is to identify any upcoming events or any announcement that could pump up the price. One of the easiest and fastest ways to learn about these things is to follow the project on Twitter. You could also look for any information on YouTube, where you can follow various YouTubers that also spend time and do research on these different coins. Once you've identified upcoming events or announcements that could cause the coins on your list to pump, the next step would be to try and figure out how much the pump will last. Keep in mind the saying, buy the rumor, sell the news. When a crypto project announces an upcoming update, you will usually see the price start to pump, leading all the way up to the actual release of the update. Let's take Cardano, for example, with ADA smart contract release. It was announced mid-August, and the price pumped by roughly 70% in just 2 weeks. But when it came to the actual release on September the 12th, the price was already in a downtrend, reaching a low of roughly $2. Just as a quick side note for the current rumors of BTC ETF's launch, my advice is to be extra cautious around the ETF launches, as this could be a sell the news type of event, at least in the short term. So you've identified some of these coins of interest for you. You've assessed how much time the pump will last. The next step is to try and identify how high these coins might go. The first thing you need to check is the coin's current market cap, having in mind that low market cap coins have more inherited risk in them. A simple rule will tell you that the lower the market cap, the more chances of that coin going parabolic there are, regardless of its dollar value. This is simply because it takes a lower amount of money to push up the price for a lower market cap coin. A common mistake among retail investors is to look at the coin's current price and think that it doesn't have much more room to grow. This is wrong, because the two indicators you actually need to look at are the number of coins in circulation and the overall market cap. The first way to determine where a coin might pump to is to look at the so-called psychologically comfortable prices that coin could encounter on the way up. Such prices can be 1 cent, 10 cents, 50 cents, $1, $5, $10, $100, and so on. This rudimentary method is better applied to coins that have a more ape-like, let's rush to all in on that coin type of mentality. And sometimes, because of human nature, it can be safe to assume that there will be a lot of profit taking for these coins just below a psychological price. The second way to try and determine what would be a possible top for that coin would be to use technical analysis. Who would have thought, right? You can use TA for a ton of things, like identifying previous zones of price support and resistance to see how moving averages are behaving and what signals they are giving. You can also use Fibonacci extension levels or Elliott wave theory to try and identify possible price tops. Naturally, using TA is better suited for more mature coins, which have a price history behind them, and not that efficient or reliable for newer coins that don't have that much price action that you can rely on. Okay, so far you've identified your coins, how long the coin should pump, and roughly how high it will pump. But no matter how much work you'll put into this, it's highly unlikely that you'll be able to sell the exact top. That would be more a matter of luck than anything. So the next step is to see how much of your portfolio you should allocate and when you should take profits. It should be obvious, but I'll say it nonetheless. Going all in on one coin that you think will pump is a very, very bad idea. This is because in crypto you have absolutely no guarantees. The pump could start earlier or later, last longer or shorter than what you estimated, or go much higher or even down in response to the events that you are anticipating. One way to mitigate that risk is to diversify. That's why I mentioned you should invest in 10 or more coins. Let's say that you're unlucky and 9 out of 10 of those coins actually go to zero. But if that one remaining coin gives you a 20, 50, 100x, then it's all worth it. Your worst case scenario is that all of your investments go to zero. So that's why the simplest and most advisable approach to use is only to invest what you're willing to lose. Not only will this minimize your losses, but will also make cashing out on your profits easier. Now, what do I mean by cashing out easier? Well, it's quite simple. When you buy a coin and it really starts pumping, if your allocation to that coin is too high, all matter of logic goes out the window. You'll start believing that that coin will only pump, and you refuse to see things otherwise and sell, only to see that that project loses 80% of its value in a matter of days, and you've not taken any profits off the table. One of the best approaches that you can have when it comes to cashing out would be to dollar cost average out of that coin, meaning to sell a percentage of your portfolio each day. And just in case that coin keeps on pumping, don't sell all of your coins. I personally keep 20 to 30% of that coin in my wallet just in case it goes parabolic, so I don't miss out on a possible top. Some would say that it's easier to sell right after the top because it's easier to see a blow-off top type of event. While this could be a method, of course, I don't really endorse it because most of the times the exchanges will be completely crashed during that time and you won't actually be able to sell anything. Finding that next altcoin pump is hard, and managing to buy low and sell high is even harder than you might think. That being said, it's not impossible. Chasing pumps on altcoins may turn out not to be a sustainable method of investing. It may make you rich for 2 weeks, but then make you broke again because you didn't sell anything when the coin pumped. So please don't do that. Don't be the guy who never sells. Take some profits off the table and have patience. The market will offer you multiple other opportunities to buy the dip. And with that being said, I hope you enjoyed the content and found the information useful. Leave a like and comment if you did, and consider subscribing to the Investa Bros channel for more crypto content. See you soon. Bye bye.